There's some big problems facing the Southern Oregon housing market, and I'm not just talking about real estate market data and mortgage rates. I'm talking about real economic issues facing our area. I'm going to tell you the three biggest problems with the Southern Oregon housing market and a great outside of the box idea for how to overcome them. Happy Wednesday, everybody. It's Brian Simmons here with eXp Realty in Southern Oregon. It is November 16th. We're a week before Thanksgiving, and I just encourage you all to think a little bit more about what you're thankful for in your life. One thing I'm thankful for is you as a viewer, and I hope you find some value in this video. We're going to dive into the three big problems with the Southern Oregon housing market right after a quick update on the actual market conditions today. If you could do me a quick favor, I'd really appreciate it. Just hit that like button, click the subscribe icon, and share this video with anybody you know looking to buy or sell real estate in Southern Oregon. As of this morning, in Jackson and Josephine counties, we had 1,136 active single-family residential listings on the market this morning. That's stable from last week, pretty much the same. 79 new listings hit the market in the last week. That's up from 60 last week. 130 price changes, 23 went back on the market, 70 went pending, which is stable. Only 46 closed. That's crazy low. We'll talk about that more in a second. 38 expired, withdrawn, or canceled. And that all total brings us to 25 weeks worth of inventory, which is almost 6 months. It's right around 6 months. That's crazy. That weeks of inventory number is obviously based on the number of closings. So when closings is super low, we're going to see that weeks of inventory go up substantially like we did. Traditionally, 6 months of inventory is viewed as a neutral market that doesn't favor buyers or sellers. Since we're looking at a snapshot of the 1 week, it doesn't really tell the full story. But I think it's fair, though, because when I'm out there representing buyers and sellers, it sure seems like it's pretty neutral right now. So take that with a grain of salt. It's neutral on paper this week. It might not be next week. We'll see what happens. But overall, I think the market is right in that range of neutral right now. Doesn't really favor buyer, doesn't really favor seller. I am really, really shocked to see that level of closings be down as low as it was at 46, okay? Last year at this time, we were still closing over 100 transactions a week. Now we're less than half of that, okay? Obviously, that has something to do with rates more than doubling in that amount of time, and so it makes sense. The good news is that we did see rates come down significantly last week, okay? It was actually the largest single-day drop on record for mortgage rates. It's kind of misleading because they actually only started tracking the day-to-day changes back in 2009, but still, it's the largest single day drop since 2009, which is substantial. And that's very, very good news. Hopefully that trend continues. Now, let's dive into those three big problems with the Southern Oregon housing market. Number one is a lack of affordable homes in our inventory. Number two is that competition is still super, super high for those homes. And number three is that financing the lower priced homes in the market is actually very, very difficult. So to better understand all this, I need to break down the bigger economic problem that exists, and that's an income problem. The median income in Jackson County is $65,249, and in Josephine County, it's $48,785, and that's according to the U.S. Census Bureau. In other counties of Oregon that are viewed as more employment-oriented, bigger employment hubs like Multnomah County, Clackamas County, Washington County, even Deschutes County, those are all in the $80,000 and $90,000 median income ranges. So with the Census Bureau saying that the $64,249 median income in Jackson County, if you do some simple math, you can see $5,354 is what that equates to on a monthly basis, okay? That's your gross income. And most lenders prefer a front-end ratio of no more than 28%, okay? And a front-end ratio is just the percentage of your gross income, that's $5,354, okay? It's the percentage of that you should allocate towards housing. And most lenders are comfortable with 28%. And that equates to about $1,500 a month. Okay, so you have $1,500 a month that you can allocate to housing if you're at the median income level. Well, what will $1,500 a month buy you? It'll buy you $225,000, considering a 7% interest rate. Okay, that equates to a payment of $1,496, and that assumes no property taxes or homeowners insurance or anything like that. Okay, so if you look at that and you know that you can get a $225,000 house with $1,500 a month, what you look at is how much inventory is actually available, okay? And in the best case scenario where you have no money out of pocket and you're using a USDA loan and you get the seller to cover all of your closing costs, there are precisely 0 homes on the market that match that criteria in Jackson County today. So the second best scenario is that the buyer can scrape together around 3% for a down payment and is approved for a conventional or an FHA loan. In that scenario, there's only 18 homes available under $225,000, and 9 of those 18 are actually in financeable condition. And if you wanted a 3-bed, 2-bath, there are 3 options available on the market today. So when I talk about a lack of affordable homes in our inventory, that's what I'm talking about. So if less than 1% of our available inventory can actually be purchased by people who make the median income in the area, that's a problem. Less than 1%. Do you think that there might be some competition for homes that meet that criteria? Absolutely. Because even at 7% or 10% or even 20, something ridiculous percent interest on a mortgage, it's still better than renting. It's still a better financial decision to build a little bit of equity than to build zero equity. And that's exactly what you're doing if you're renting, is building zero equity. Actually, you are building some equity, but it's for somebody else. So it's nice of you to do that for them, but it's probably not the best decision for you. And that's what we're here to talk about, is what's best for you. So that talks about those first 2 problems, the availability of affordable homes in the inventory and the competition, right? So the third problem is that financing these homes can actually be really, really tough. So even if you find one of those few homes that are actually available in that price range, the condition of them is usually pretty difficult. A lot of times there's deferred maintenance, or maybe it's an older manufactured home. Maybe it needs a roof or to be painted or something to that effect. Those issues make the home very tough to finance for a lender because the lender sees them as more risky. So to mitigate that risk, they generally want more of a down payment so they know they have a better chance of recouping their money if things are to go south and you're to default. It's not the lender's fault though, okay? And a lot of people think that that's on them. I don't think it's on them at all, because at the end of the day, they're a business and they're entitled to make a profit for the services that they provide you. And they're not obligated to take on any sort of investments that are too risky. That's a good thing, because remember what happened when they did that back in 2008? How'd that work out? Not good. So if you are around the median income level and you're looking to buy and you know that it makes more sense to buy and you're just trying to find a place and you're willing to do whatever it takes, I do have a really good idea for you. What I would do is find a really, really good friend of yours who's in a similar situation and go in together on a duplex. And you live in one side as your primary residence and they live in the other side as their primary residence. And together you buy that duplex. Duplexes can be had for around $325,000. There's several of them available between Jackson and Josephine counties right now on the market currently. The competition is significantly less for a duplex versus a single family residential home. If both you and your friend made that median income level of $65,000, that means you have $130,000 together, okay? If you both could afford $1,500 a month, now you can collectively afford $3,000 a month. A $325,000 duplex with 3% down, which is less than $5,000 a piece, leads to a payment of about $2,100 a month before taxes and insurance. So basically what that says is $2,100 a month divided by 2 is just over $1,000 a piece. Okay, $1,000 a piece versus $1,500 is sure a lot better deal. So those are the 2 big benefits. You're saving money every month and you're building equity. Live in that house for 3 years. Let the home appreciate in value. You continue to pay it down, and there's a good chance in that amount of time you could be sitting on $25,000 or $30,000 in equity each that you could then take and roll into your next home. And if you increase your income a little bit in that amount of time, and or rates even come down a little bit, you could be sitting in a very, very good position that you would not be sitting in if you were to continue to rent. So let's say in 3 years the scenario is this: you have an income of $80,000. You have $30,000 in your pocket to put down based on the equity of that duplex. Rates come down to 5%. And if all of those 3 things happen, you'd be shopping in the $400,000 price range. And that's a whole lot better than renting, isn't it? So if you're interested in talking through that idea, I'd be more than happy to discuss it further with you. Or if there's anything else I can do to help you, please don't hesitate to reach out. You can call me at 541-954-7758. That's my direct number, and I'd be more than happy to talk with you. Again, please don't forget to hit that like button, click the subscribe icon, and share this video with anybody you know looking to buy or sell real estate in Southern Oregon. And don't forget to check out my website, buyingsouthernoregon.com. Thanks for watching. We'll see you next week.